Hey everyone, welcome to yet another episode of Ying's Squawk Box. Today we're going to be talking about the rise of industrial sector and the reason why I like this sector. Without further ado, let's get started with the chart. Here is the chart for industrial index. This is the index fund. It's an ETF of the industrial sector, and we're looking at XLI. Here we have this market top along with S&P 500. Let's put across, and we have this drop. It's fast and furious all the way down here from $85 to $48, almost a 50% drop. So let's put across there. Within this channel, that's something doable. That's something tradable, and that's the reason I like it. Now, me personally, I actually unluckily didn't get involved in this bottom down here, even though I realized that's the bottom. I put most of my money just betting on the market overall. I didn't really get heavy in this sector. And here is another buy spot. I started paying attention to this sector. Let's put a horizontal line, and boom, we have a small bounce back along with the market from $58 to $76. And here we have a base. Okay, this base is extremely interesting because it actually held above the moving average. Let's put up a moving average. There you go. Here's the moving average updated chart for this index fund ETF. It's tracking industrial sector. And here we have a base. We have a base that's forming above this horizontal line, which is actually the 200-day moving average. It held up. We have the space, looks good. It's ready for an uptrend. I think there could be a potential breakout somewhere here. Let's put it across. And the next resistance is 76. Let's put a horizontal line. That's the idea. That's the trade. The trade is to bet on the fact that this sector going above along with the market, and that we're having some extra cash in our pocket that we're looking for some additional investment. When I say extra cash, I'm talking about that 10%, 20%, 30% of the cash that you set aside that you did not fully get invested, because let's be fair, right? When we are here, let's put across, we don't really know that's a market. We need to be prepared that this index going down further, which is why we have that extra 20, 30% of the cash in our pocket that we have not touched yet. We have not used it. So there you go. I think this is a good start. Let's look at a couple of stocks. First one is Boeing. Boeing is extremely interesting. I actually start paying attention in Boeing when it's at this downtrend. Let's put a horizontal line. Let's put a horizontal line. It broke fast and furious along with the market, along with the pandemic. Now we have the space. We have the space that I've been looking at personally. Let's put a horizontal line, and we have another base here. Let's put a horizontal line. The space formed. It held it. We're ready to go. We have a small pop here. Let's put across. That's the reference point. This $230 in Boeing is going to be the next spot that the stock's trying to get above. I think we're going to have another small base here, which is why I got involved. And I think we're looking at 230 next time. On top of Boeing, let's look at a couple of smaller cap. When I say smaller cap, I'm talking about market capitalization. First one is Lockheed Martin. Being a jet fighter fan myself, and we have this cross. We have this bottom. Let's put a cross. We have this support. Let's put a horizontal line. Here we actually broke. If you use this May 15 as a reference point, you're probably going to get out. So let's put a cross. And here we actually held. We come back up, which is why I add some here. And the next up could be interesting. We have this high, that's gonna be 415. Let's put a horizontal line, and boom, that's your trade. I'm not saying it will bounce back immediately. We could be seeing a lot more volatility somewhere down here. We could be even going down. But if the market's going up, markets look healthy, and industrial sector is trying to catch up, I think this is gonna be the leading name to go. On top of that, we also have General Dynamics. General Dynamics follows a similar chart. They are all tracked. They are all in the industrial sector. Industrial sector is tracking this, is tracking these stocks. I'm pretty sure they have a portfolio that Lockheed Martin, General Dynamics, and Boeing, they're all in there. So this bottom, we don't need to mention that. That's going to be very important. Let's start off from there. That's going to be your support. Let's put a horizontal line. That's going to be the top. It's the pivot top. Let's put a horizontal line. And here we broke down a little bit, poking into the moving average. We try to come back as a good as spot. Let's put a horizontal line. I think that's going to be the support. In the future, the stock is going to go up. It's going to go up with the market, go up with the sector. I think there's a trade here. Paying attention to the big overall macro analysis, right? We have this market, we have this S&P 500, it's doing well. I successfully avoided this. Let's put a horizontal bar. I get back in here, specifically on this area. Let's put a horizontal line. I'm good to go. But I want to do things carefully. I want to make sure I don't add in unnecessary risk. So when I got in here, let's put across, I didn't get in 100%. I didn't even add leverage. I get in 50%, 60% just to test the water. So due to that fact, I have an extra 30%, 40% of cash in my pocket for additional investment. And these are spots to get back in. Let's put across. These are spots to get back in. Let's put across. And something like that is definitely interesting. When you get back in, you don't have to get back into the market. You can get back in with a particular stock. For example, Apple, it's looking great. For example, Amazon, it's looking great. Something like that is interesting. And when you're getting these high beta stocks, you want to make sure volatility. You want to watch your risk. You want to watch that. You want to watch that value at risk, and you want to watch how much it's moving. So due to that fact, you're left with additional 10 to 20% of your cash in your portfolio. That's when we're starting looking at the second to best option. For example, industrial sector, right? For example, consumer sector, something like that. It's interesting, and that's going to be the frame of thought. So I hope you liked today's episode. If you want to support the channel, give it a like and hit that subscribe button, and I'll see you in the next episode.